2024 has been a year for the history books as probably the most bullish share market for the last 2 decades. But this week, the market faces its final test for the year. Hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday, the 17th of December, 2024, and that is right, we are very close to 2025. It's gone like a flash, and so has the market really. But before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for yourself. So the big discussion for the Australian market for the past sort of fortnight has been, when will the RBA cut interest rates? Originally, it seemed that they were going to sort of wait till May to cut interest rates, and that was because they said we're going to wait for two sort of negative readings, or two readings that support a rate cut. Now, everyone assumed they meant 2 inflation readings, and so that would mean they're going to wait till May, wait for 2 additional inflation readings, basically. And then the RBA came out and said that those 2 readings didn't have to be inflation readings. It could be jobs data, it could be economic growth, it could be retail sales, just 2 weak readings that would allow them to sort of pull the trigger and cut interest rates. And so everyone then went, okay, well maybe that means February. We'll get all that data in January. There could be 2 readings in January, or even in early February, and that means that they'll cut in February. And so everyone started pricing in February rate cuts from the RBA. And after the RBA last RBA meeting, they sort of even pointed to that themselves, although about as much as they pointed to anything this year, which is not an awful lot. Following that, we had the November jobs report for the Australian market, and that came in at 3.9% unemployment, well below expectations from unemployment. There were many more jobs created than expected. It was a bit of a strange reading because it looked like all the jobs were created by Australian governments rather than the private sector. But even so, it was much, much weaker than expected. And so where the market assumed it was a guarantee that we were going to get 2 weak economic data points before February, now they've gone, oh wow, maybe the economy is actually stronger than we first thought, and once again everyone's predicting that the rate cut won't come until May. So if you followed all of that, basically the market thought rate cuts were coming in May, then they thought they were coming in February, and our market pushed up. Now they think they're coming in May again, and as a result our market has seen selling since that data point was released. So the Australian market's fallen close to 3% across the past week, and it's pushed up in today's session. Most of that selling, I believe, has come down to the changing in timing on the expected first rate cut. So now it seems like end of March, April, or May is when the market thinks the RBA will first cut rates. The big events for the rest of this week, though, are all in the US. The US is going to face several major tests this week. Tonight they've got retail sales. Tomorrow night they've got a Federal Reserve rate cut. Thursday night they've got GDP. And Friday night they've got PCE, or inflation data. Each of the nights this week they've got a huge data point being released. The US economy is a bit all over the place. It's very difficult to gauge just how much it's slowing down by. It seems like the services sector, and by that I mean a few large technology stocks, are actually doing quite well. Whereas the non-services sector, the industrials, manufacturing, everything else, is slowing down quite rapidly. What does that mean for the Fed? Well, they've pretty much stated that they're going to cut rates this week. It's pretty much taken as a given by the market, and they're going to cut rates to support the real economy. They've also sort of indicated that rate cuts aren't going to come as rapidly next year, and I don't think that should be surprising because inflation has actually stalled for the past few months. They're targeting a 2% inflation rate. Underlying inflation in the US is 3.4%. Their federal government is printing money about as quickly as it possibly can, as quickly as the printers will allow it, and that is inflationary. Trump's talked about bringing in tariffs, and that is inflationary. Cutting company taxes, inflationary. So while we do have parts of the US economy slowing, other parts are remaining strong, and inflation is remaining strong. It's a lot for the market to weigh up, and to be honest, the market is pretty much at unbelievable valuations. I think with all this to weigh up, there's a lot of room to the downside. We're going to have to see continued Goldilocks readings at each of these economic data points for the market to continue higher. We've had Goldilocks readings all year. Will we get a Goldilocks reading retail sales number tonight? Probably. Will we get a Goldilocks reading GDP tomorrow night? Almost certainly. On Thursday night? Almost certainly. The big risk is Friday night's inflation data. And if inflation ticks up even slightly, I think we could see some selling in the market. So what does that mean for the Santa rally? Well, so far it hasn't been much of a rally. Like I said, we've fallen about 3% for the Australian market since about the 5th of December. We did see a bit of a push up today, and it does look like our market is rising off some technical levels, maybe rising off a bit of an uptrend line. And the discussion around the office today was, is this the start of the Santa rally? It could be, but it's going to rely on that US data. Our market, I think, is heading to the point of a pennant. We've got a short-term downtrend, we've got a longer-term uptrend. Usually we'd break in the direction of the underlying trend. Usually we'd break to the upside. And to be honest, I think we could easily have a few more days in it. But whether or not we do continue and we do see that Santa rally and break out to the upside is going to come down to the US data. It's going to come down to the reaction to the rate cut. It's going to come down to the inflation data on Friday night. So let's have a look at the charts for this week, guys. This is the Australian share market, the XSHO. And as I said, we've bounced off maybe a bit of a longer term uptrend line. We've got our stochastic crossing and turning to point higher. We've got a nice bullish bar today, and that all points to further upwards movement. Contrary to that, we do have a short-term downtrend, and we do have some resistance around 83.50. Wouldn't be surprised to see us push up to that level tomorrow, but like I said, whether we break back higher and head back to our all-time high at 8,500, I think it's going to come down to the US response to the rate cut and the inflation data on Friday night. So let's have a look at the US markets. And this is the US S&P 500 index. Currently, it's on an uptrend and it's trading in a very tight sideways range in the short term. We've got some resistance at 6,100 and we've got some support at 6,000. This market is a little bit deceiving. And the reason I say that is the top 7 or maybe even up to 10 US shares have performed quite well over the past fortnight. They've actually kept rising. Many of them have set all-time highs. The NASDAQ has set all-time highs based on those stocks. But outside of those sort of handful of very, very large technology shares, the US markets actually looked fairly similar to ours. They've seen selling over the past fortnight. Only those handful of stocks have kept things up. Will they keep things holding up? Will they allow the market to push through 6,100? Or will they break and start following everything else? Like I said before, it's going to come down to the response to the rate cut, how hawkish or dovish the Fed is, and then the inflation data on Friday night. Usually we expect things to break in the direction of the underlying trend, and that would mean we're going to see the S&P 500 break 6,100, and we'll see a Christmas rally, a Santa Claus rally. However, like I said at the very start, this is the final test for markets this year, and they've passed pretty much every one so far, but this is probably going to be the hardest test because this is the test where they're at the highest valuations. They've got the most to lose. So I will wrap it up there for this week, guys. Things could look pretty different this time next week, but unfortunately you won't be getting this video from me next week, or if it is, it'll be from some exotic locale. Hopefully you guys enjoyed. Hopefully you've enjoyed every video we've done this year. We've put a lot of effort into improving our videos, and we're going to do a lot more next year in that regard as well. So from everyone at Traders Circle, the team here, we wish you all a very Merry Christmas, and look forward to seeing you guys all in 2025. Bye for now.